Welcome to Unearthed, a podcast where we unearth all there is to know and golden insights around the industry. I'm Joe Cavatoni, Senior Market Strategist for the Americas.
And I'm John Reade.
And today, we're going to have a really special episode where we talk to someone about a market that if you know gold, you can't think about gold without understanding it. And that's the India market. It's got a very unique cultural background, a lot of affinity in terms of its population and the understanding of the market. And you really, like I said, can't think about gold without understanding the dynamic in India. Today, we're joined by Sachin Jain, the CEO of India for the World Gold Council. And I'm delighted to welcome Sachin Jain to the program. Thanks for joining us.
Thanks, Joe. It's an honor and delight for me to be a part of your amazing platform. Thank you.
So, Sachin, let's talk about the Indian gold market at the moment. Obviously, two big components there. The jewelry market, where we've seen volumes of gold jewelry demand in the first half of the year down something like 21%, yet the value up 10%. Contrast that to the ongoing growth we're seeing in investment demand from India. So how would you sum up the state of the Indian gold market at the moment?
Well, John, right now is great in India. To be a part of that country is just phenomenal time. And as you said, about 80% of what we consume is still jewelry, about 20% is financial consumption. And while we talk about this huge degrowth that's coming in the jewelry market, I would contest that because value, as you said, is going up. But also, if you go back to the psychological ways by which Indian consumer buys, they always are looking at some price stability. Unfortunately, if you reflect on the last 18 months, we've only had about 4 weeks in total where price stayed on. And those two particular times, the consumption boomed. Also last year, the government of India reduced the import duty from 15% to 6%. And that really triggered, almost a crazy amount of consumption at that point. But every time we've seen the last 18 months that there is some stability of price, consumers come back. My belief is that whilst, the next quarter, which is the October, November, December, is the most important consumption quarter in the country. And I believe with what's happening in gold, will only do positive for the consumers to come in. Now that's on the jewelry side.
Let me just come in there. That trend that we've seen of lower tonnage of jewelry demand and more money being spent at spot prices on it is something we've seen around the world. Looking at all the major regions, the major consuming regions, the only one that hasn't shown that is China, where jewelry demand in the first half of the year was down substantially. But even there, the amount of dollars that was being spent on jewelry in China, obviously in local currency, was flat year on year. So basically, the whole world is showing this same trend of buying less gold, but spending more dollars for it. To me, that shows that I think that the jewelry market is still really healthy. The fact that consumers still want jewelry and are still prepared to pay more for it than they were last year, even if they're buying less tonnage, I think is really important.
Yeah, I think it's a really fascinating point because we know that the significance of gold in the India market is material. I also know it's important for us to lay out for our listeners that jewelry isn't just a consumable for the purposes of having some bling. It's also about the possibility of saving in that format. Maybe you could talk a little bit about that dynamic in today's market as well.
Sure.
Still a prevalent issue.
Yeah, I think before I get to that point, John, to your point, one of the other changes of today is historically we've seen recycling of gold, which means gold to gold, not really gold for cash, was around 20%. This year, we've been witnessing that crossed 50%. So the interest of consumers for jewelry in gold is an all-time high, but consumers are coming with their old gold to buy new gold. I think that's interesting. And to your point, Joe, the fact is that in India, gold is a part of the social fabric. It's a part of a conversation that or a guidance you get from your grandfather in the morning, and your father is part of your, family conversation. So it's been deeply rooted in our blood. And gold is this friend that has been alongside your family forever.
Right.
It's a stature of your wealth. It's a stature of who you are. A large part of our consumption for jewelry also happens on weddings, over 55% actually. It's massive. So your entire saving of your lifetime gets used largely in the form of gold on weddings.
So now let's translate that into where you were heading, the financial markets. Tell us what's playing out in today's market around gold in that context.
Well, with last 18 months of what's happened, gold is just, got the optics on what gold is at all-time high. However, how it's different in India is that our average age or median age in India is 28. The penetration of digital India, I mean, we are the country where we have the lowest data cost, 10 cents for 2 GB. That's the cents, and we've penetrated to every rural India market as well. Now, the younger India, his affinity to digital consumption is an all-time high. It's been very different how we consumed and how our parents consumed it. And when they look at the digital products of gold, which includes digital gold, includes ETF, there is a lot of interest. And I think what we really need to, what we're working on in India is the pure awareness of these products to the man on the street. And that's a big gap. We have only one regulated product in India, which is the ETF. But for ETF, you have to have a Demat account, and there's some rules and strictures around it.
What is a Demat account? Can you just explain that in more detail?
Yeah, that's a dematerialized, account for holding stocks or any assets, and that essentially is something that is, let me share some numbers with you. 10 years back, the extent of dematerial accounts in India was about 10 million Indians who had it. Fast forward to today, it's 498 million Indians who have a Demat account.
So more people having access to the securities markets, more people having access to ETFs. It's interesting. Some of the stats that the World Bank talks to around bank accounts alone have gone from somewhere in the neighborhood of 20 to 35%, I think it was in 2011, to 89% of the population in 2025 having bank accounts. So people are really moving their money, their wealth, and their savings and their opportunity into the financial system. So it's actually happening in a very big way. Do you think the India market's taking the lead from other markets, or is it kind of thinking about its own capital market on its own? How is it thinking about the development of financial products?
I think, Joe, the change in the development is happening across different spectrums of India. Financial markets being one, transparency being the other. Earlier, it was a whole black economy that used to exist in our country, and that's getting minimized. It's an active effort to bring everything in the system. That reflects not just on gold, also on real estate, also on other elements which used to be cash. So hence, I think India is transforming, and the financial markets focus on gold, all that is transforming to, and it's a distance getting traveled that let me sit on my gold, let me put it under my bed and I feel good to saying I'm happy that my gold is sitting on my telephone screen. We in the financial markets and perhaps in the Western markets think it's an easy thing to do, but it's a journey to travel.
Right.
And India is traveling on that journey very, very quick.
One of the things that I've experienced when I visited India, and I was there just 2 weeks ago where we met up again, there is an attitude sometimes that when you speak to investors about gold, they can be a bit dismissive towards it because they say, oh, we own gold, we have lots of jewelry, my wife has lots of jewelry, I don't need to invest in gold. What are you doing to challenge that mindset?
I think, John, it's such an important point that you've raised. And the reality is that, as I said, all of us have some part of gold, but mostly in jewelry, some part of it in coins. Like my daughter would always get a gold coin from her grandmother on Diwali, like for example. So it's also anecdotal from that sense. There are specific occasions, and this Friday is a very important occasion where every Indian bride or a woman in India would fast for the day, praying for the husband to live longer, and at the end of the day, she gets something in gold. So that's a tradition. It's a good price to do it. It's an expensive occasion, but when a man of a house is investing in his mind, whilst it's a jewelry for the better half, in his mindset, it's a saving for the family. It's the wealth of the family going up. So it's very deep rooted. Now, what we're saying is financial markets. What we're saying is hedge. What we're saying is alternative assets. What we're talking about is returns. It's a new phenomenon. Because an average Indian is saying, the moment I need to save, I save in gold. And today, when we do researches, the clear distinction comes from how the rural India consumes, how the urban India consumes. And when you talk to urban investors, they're thinking about, should I invest in gold? What are the returns? What are the other opportunities? You talk to rural India, the guy is very simple. He's like, I save in gold. That's perhaps the only opportunity, and life is great because gold has gone up. So the saving to investment is the sort of journey we're on.
Fascinating when you think about that conversation you're having with the urban and the rural investor. Tell us a little more about the urban investor's mindset. Our model portfolios, is sophisticated portfolio allocation, is that stuff that's being talked about at this point in India?
Well, I think there's something that I picked up from John when he was talking about, and he said that an investor is basically putting bucks where he thinks it's going to grow.
Right.
Full stop. He's
Yeah.
not really doing planning and stuff like that.
Exactly what I said, actually.
Yeah.
To me, a retail investor often just buys stuff because they think it goes up.
Right.
One of our jobs, and I think the job of the financial industry in India, but also elsewhere, is to think not just about a number of things that you own,
Right.
but to think about them in a portfolio context.
What are those biggest competitive assets? What do we face as a competitive field?
One of the very important competitors there, actually, ironically, is the other asset classes which India is consuming for the first time. Like, for instance, a younger India for the first time is able to invest in mutual funds. And it's a cool thing to own it and stuff
Right.
and talk, coolly about it. And I think we need a good job to make gold cool in that context. We were having a conversation with all the Bitcoin conversations in India, which have just begun. But when you study the consumer, a major part of that investment is not coming because great returns are happening, but purely and simply it's a cool thing to talk about. And hence, I think the younger India is getting dissuaded by both these elements.
Right.
Which is a very unique thing to India right now.
We've seen some stunning stock market performance in India up until this year, when the returns have actually been choppier, maybe sideways. I haven't checked in the last few days, but certainly the performance of the Indian stock market this year hasn't been as strong as it's been in the last few years. Do you think that's benefiting the attraction of gold from sophisticated financial investors?
I think certainly yes. Certainly the institutional investors are looking at it. Certainly the government is looking at it from various associations like insurance and provident funds. I think there's a lot of conversation there, but it is. But I think what it's really challenged is that gold isn't an asset class that's sleepy. Gold performs, and our conversation about balanced portfolio, and Joe, you mentioned about that. It's been something that we've been bringing out a lot. And I think now not just the retail investor, but institutions and also family offices are recognizing it. And while we talk about 5% and 10%, as your investment in gold, when they really look down deep in, the investments aren't any. I mean, it's 1%, 2% held in gold by the families. So active calls are getting taken as we talk now.
Yeah, that certainly was the audience I was primarily speaking to when I was in India 2 weeks ago. Family offices, high net worth individuals. The irony was, I spent a week in India and I didn't even go into a jewelry shop. Very much focused upon investment there rather than jewelry.
It's a growing space for sure. I want to pick up on something that you mentioned in your last answer, and that's government engagement. Now, we hear a lot in the US about India 2047. Why don't you unpack that a little bit for us and tell us what's going on?
2047, India will be 100 years of independence will happen. And the leadership in the country has laid out a vision for the next 22 years that by 2047, we will be a developed nation. So it's Viksit Bharat 2047, which is developed India by 2047.
That's a very ambitious time frame, perhaps, to reach developed market status in what is that? That's the next 22 years.
22 years.
What sort of economic growth are you expecting over that period?
Well, John, the roadmap that's been laid out is from the current economic size of less than $5 trillion to a very ambitious project to get to between $23 trillion to a $30 trillion. Now, that's massive.
It is. I mean, one of the things that India benefits from amazingly is a demographic dividend that no other country has. You have a very young population, and that population is going to turn into workers at a tremendous rate. And I was reading earlier that the demographic dividend in India is going to continue until maybe 2050, potentially 2060. That must be a big component of the expectation of the growth we're seeing from India.
Absolutely, John. I mean, if you look at it today, the median age of India is 28.
Wow.
Median age of China is 39. Of America is perhaps 49. Japan has crossed 60. Now, you're absolutely right. That's the right place for India. But key would be, how do we capitalize on it? And hence, every trigger is made so the next 22 years gets us to that point.
So economic expansion continues in India, growth in the economy, growth in industry. How about growth in terms of wealth, growth in terms of opportunity for people to earn more? Tell us a little bit about what's happening.
I think the current per capita income, which is purely sheerly the disposable wealth in the hands of every Indian, is about $2,800. Just imagine that in the next decade, it's envisaged to be $11,000. And at the time of Viksit Bharat should be upwards of $15,000, which means that an aspirational India, which let's talk about gold, has been aspiring to own gold, will have the wealth and means to own gold. And while we talk about, of course, the price of gold has gone up mammothly, but we believe that with this increase of disposable wealth in hands of every Indian, that consumption story should continue.
It's an interesting one as well, because in my experience of looking at the gold market, I became a gold metal analyst as opposed to an equity analyst or a gold miner when gold was about $270 an ounce, on its way down to $250 an ounce.
Wow.
We're now sitting at around $4,000 an ounce, yet India's gold consumption has stayed, in tonnage terms, pretty flat. So despite this massive increase in the gold price, still huge appetite for gold in India. On the basis of the economic expansion that you're talking about, that looks set to be continue for the medium term. Would you see that as a possibility?
Well, I think what we did, John, was that we went to the government and said that let's unpack this $30 trillion or $23 trillion. And our simple question was, what's the role of gold when we'll be a developed nation? And hence we were encouraged to make out a whole roadmap. And right now we're cracking out a roadmap, which on one side is all the experts in the world as to where the world is going. Secondly, the industry. And thirdly, the government on one side to have a very clear vision of 2047 and hence a roadmap of 2040, 2035, 2030, and what we need to do today. And I'm very happy to say that loads that's coming out is very implementable. Loads that coming out is very exciting.
What would you say are the top 3 things that you would highlight as key elements to the success of gold playing a part in 2047?
Well, I think the 3 very important elements are firstly that the Indian banking system will play a very bigger role today in the gold market, not even just inside India, but even globally. And there's a lot of appetite by our regulator to have that conversation. That's one part. Secondly, we're saying that is there mining in India? I mean, that's a conversation that we've been having. There were a lot of mines in India that were defunct because they were not financially viable in 2002. And the topography of India allows that needs to be explored. And there's a bit of work happening on seeing where that gets to. So I think that's the second pillar. And the third pillar is real consumption. And the consumption from not just jewelry, but financial markets, new products, and how the Indian financial investor will be more savvy to invest more digitally. And as I said before, with the young India and the depth of digitization in India, I think products like these will find an important place.
Is this bringing existing wealth out of the coffers and into the system? Is it kind of bringing gold out of the corners and bringing it into the market? Tell us a little bit more about it.
Yeah, I think, the government of India had done a gold monetization scheme over the last almost 2 decades. It's not been very successful.
Right.
And right now, our conversations with the government have been around revamping those efforts. But there's an openness to saying that if there is gold stored in our households, how can that be logically brought into the system? And I think you will see over the next some time that some great products coming out. There's even a conversation by the government to privatize that, so not just held it up.
Right.
So I think the way these problems will be approached, or these opportunities will be approached, is with a new lens, with the lens of today, not necessarily with the weight of the past.
How will that fit in with the gold loan business that exists in India? Because that's an essential component, I think, of how gold is used in India. So people taking their jewelry and using as collateral against borrowings, and then when they return those borrowings, they receive their gold back. That's a big business in India, I believe, but growing rapidly as well.
And John, it is a fabulous and a huge business. Now because everything that financially becomes bigger, our regulators tend to get more involved and make it slightly more, sort of tight. Having said that, the rural India, which has been buying jewelry as saving, has been using, gold jewelry as a form of hedge and form of loans, and that's become a very massive market. Almost about 2 lakh crore. Let me translate that. So upwards about almost $100 billion is the market size.
Wow.
Half of that which is organized and half of that which is unorganized that exists. But I foresee that as these products will get more regulated with government involvement, I think transparently and peacefully people can put their jewelry into these areas.
So we've got literally the banking system, the lending system, gold monetary system, all of these factors working together with the opportunities potentially around mining, but a lot of work to do there. as well as figuring out how to capture the energy of that youthful population in that digitization context. All great opportunities. What do you see are the biggest challenges to the success of Plan 2047? Are there impediments that could develop immediately? How far out do you see before we should be checking in? What do you think?
Well, I think, Joe, one of the biggest, I think one shouldn't say obstacle, but something to watch out would be the consistency of the economic reforms that get set up, and hence the consistency of how the leadership of the country is. I think that not just for gold, but for every other element of the future, that'll be a very important risk opportunity area to watch out.
Right.
I think that'll be one. The second, I think, what the last 18 months has taught the entire world is how geopolitics gets handled. And India has currently been a very unique spot where they've been friends to US, friends to China, managing with Russia. And I think it's great diplomacy there. And I think that will be an important element, whether you'll be aligned to the US, aligned to Russia, China, how that'll pan out will be an important element of what happens to
Sure.
India, and hence whether our plans happen or don't happen. I think these are two fundamental ones. And thirdly, of course, would be the work that will be done around making jewelry more contemporary, more contextual to a new age consumer.
Right.
Because a lot of part of our jewelry is still very traditional. And I think there's a lot of work to be done so that when you walk into a jewelry store, you feel I am in a cool place. I'm not in a historical place that my grandma went, but I'm as cool as a store as an Apple. So I think that these are three things that are opportunities, somewhat threats, but I think areas to watch out.
Excellent.
Fantastic. Well, look, it's been great talking to you, Sachin. Joe, I'm stunned always by the economic potential of India. The demographic dividend, if it's used properly, has the potential, as Sachin has said, to grow the economy materially by 2047. And I think gold demand on the whole is in a good place.
Yeah, I would echo that, John. I think that I've been very optimistic about the growth of financial investment and gold in its role there. But what I think this has given me the insight on is that be balanced in understanding how this dynamic is going to develop over the next 22 plus years. And with that, I want to say thank you very much on behalf of John and myself, Sachin. Thanks for joining us today.
Thank you.
Thanks, Joe. Thanks, John. It's an honor for me to be here. It's pure delight. What you guys are, both of you are creating is pure gold. And I can only see that over the years, everybody's going to refer back to Unearthed. It's really pure gold that's getting created. So congratulations to both of you.
Thank you very much. And there you have it to our listeners, pure gold from Unearthed. Subscribe where you subscribe to all your podcasts and join us next time for another exciting episode. Thank you very much.